Mute on.
All right. Hey, everybody. Welcome to today's webinar, Making It Your Business to Learn About Business Credit. You can see I have a special guest today, Tracy Becker, over from North Shore Advisory. So before we get started, I want to make sure that everyone can hear us okay. So you'll notice that on the right-hand side of your screen, there's a chat feature. We'd love to find out where everyone is joining us today. So we're here in lovely Westchester County in New York, about 30 miles north of New York City. So what city and state are you logging in from? So using your chat feature, please share that. You can send a chat to all panelists or all to the host, and we'll be able to see that. All right, so good. So we definitely have people hearing us okay. So we have someone joining us from North Attleboro, Massachusetts. Welcome. Waynesboro, Virginia. Thanks for joining us. One other thing to point out, if anyone is at their computer with more than one person, please indicate as such so we can have an accurate count of how many people are joining us today. You might notice that when you join us, even if it's by phone, that your phone automatically gets placed on mute. That's just to make sure that we don't have any background noise as we're going through today's presentation. But if you do have questions, we really do want this to be interactive. I'll be kicking it off with a few questions from Tracy or for Tracy, but please ask questions that you have utilizing our chat feature. So if you send questions that way, I'll be able to see it and pose your question for you. So with that said, before we get into today's topic, just by a brief way of introduction, Tracy, if you could tell us a little bit about yourself and North Shore Advisory, whom you founded.
Sure. So I am a credit expert. I'm psycho certified, and I've been fixing, improving, building credit for companies and individuals for over 30 years. I have a staff of psycho certified credit experts who work on our files, and we help business owners and individuals who would like to get financing or just be in the best possible position for financial tools that credit is weighed heavily on. So we work with thousands of lenders and professionals like CPAs, attorneys, business lenders, mortgage professionals by helping their clients to get into a better position so that they're paying less money for financing and they're also in the best position to get clients, since credit is reviewed by many when they're reviewing bids for a potential position or a potential account that they want to hire. They'll look at the business credit. And personal credit, obviously, is for so many different things like credit cards and mortgages and all kinds of financing. So we're in the business of helping the clients so the professionals can help them to get whatever it is they need to grow their business or to gain access to more financing for their personal life. And I've published books on credit. I've written articles for major news journals. And I educate professionals and individuals through seminars. I've been doing this just a very long time. I've seen the industry change over various decades, and business credit is very exciting to me. It's becoming more and more understood, and it's so important because of the regulations. So that's a little bit about me.
All right, thanks. And that just kind of brings us to why we asked you to join us today. Those of you who have joined us at our webinars over the years know that quite often we'll give webinars on personal credit, and certainly although there's a lot of misinformation out there on personal credit, the resources are available. The assistance, not only GreenPath but similar type of organizations, is definitely out there. But one thing that we came across is the fact that when it comes to business credit, it is so much harder to find good information, to find good advice, to even know what your rights are. And something that became very obvious to us in our research is how little regulation there really is, especially compared to personal credit. So today we wanted to start with the basics, and then we'll kind of drill down a little bit more. So first, let's just kind of get a sense of who the players are, right? So I know for personal credit, you have your major credit bureaus, Experian, Equifax, and TransUnion. What are the major credit bureaus when it comes to your business credit?
So the major credit bureaus are Experian, Equifax, and then there's Dun & Bradstreet, which is the oldest and most well-known. So Dun & Bradstreet actually merged with TransUnion years ago. So it's really TransUnion and Dun & Bradstreet are together in terms of business credit. So it is similar to personal credit. It's Experian, Equifax, and TransUnion, except TransUnion is Dun & Bradstreet.
Different brands.
So those are the major business credit bureaus. And then there are smaller business credit bureaus as well. And they're used like industry specific. So you have like PayNet, which is used in the construction and transportation industry. And then there are others as well that are used like in the equipment industry. But the biggest ones that are most popular are Dun & Bradstreet, Experian, and Equifax.
Okay. So when we have those business credit profiles, I know that when I want to check my personal credit, I can go online to a site like annualcreditreport.com. I have a right to check my credit reports for free once a year. Does the same thing exist when it comes to these business credit bureaus?
No. So if you want to get a copy of your business credit reports, you would go to each bureau individually, and you can get a copy of your business credit reports by purchasing them. And they're expensive. I mean, it could cost you over $300 for all three. We do have a way to pull business credit reports, all three of them merged together for $150. So we can do it for you if you need them for a much lower price. The difference is we're going to get more of a summary of the three credit bureaus with some scores, but not all the scores that you can get when you purchase them from the business credit bureaus. But there are a lot of different scores that the business credit bureaus offer that are just kind of like the same as the scores, the other scores that are on there. So they just kind of give you the same information over and over in like 5 or 6 different credit scores. So it's not really that important that you see every credit score. It's more important that if you're evaluating your business credit, that you're able to see what the most important aspects of your business credit are and what's hurting it. So if we pulled your business credit reports merged, we can actually give you a free consultation and tell you what's hurting you, what's helping you, how to really understand and read them, so you don't have to get like full business credit reports from each credit bureau.
So you kind of get the gist. And let's take a step back for a second. You know, we're going to dive into some of the different credit scores for businesses that are out there. But as a small business, why should I care? So how is this information used? Just to give an analogy, like for personal credit, I know it's used to obtain a car loan, a mortgage, even certain employers will check your credit report.
Yes.
So why is it important to a business?
So for a business, it's extremely important, and people don't realize that because it's so unregulated that no one has to tell you they're pulling your credit. Because all they have to do is go and buy a copy of your credit report. So you'll never know that somebody's reviewing your credit, and you'll never know why you might be rejected when you're trying to get a new account, or even getting executive talent, or going for financing. So they don't have to tell you why you're being rejected. So they can pull the credit reports and never explain that it was because of your business credit reports. So it's really important for that reason. It's important because if you want terms with a vendor or a creditor and you want the best terms, if your business credit is lacking information or if it has delinquent information that you might think is minimal or isn't even on your credit report, that could affect your ability to get the best payment terms with a creditor or a vendor, or even, this is something that I find very interesting. So if you have a business and you're going for, let's say, overdraft protection on your business checking account, or you want a line of credit associated with your business checking account, which is pretty standard. I mean, most businesses love to have a line of credit. So if they're having like a slow month and they have payroll they have to make and they know they're going to be getting paid a lot of money the next 3 months down the road and they're not going to get it now, they don't have to worry about the fact that they don't have the money today. They can use their line of credit. And that line of credit, let's say you have a $100,000 line of credit, you don't have to take the whole $100,000 out. You just take what you need and pay it back. And usually the terms are pretty good. You know, it's usually like 1 to 2% above prime. So it's a pretty good interest rate for business lending. So let's say you go to your bank and your business banker, or whoever you deal with at that bank, usually they tell you they're going to pull your personal credit. But they also pull your business credit. And they may not, the business banker may not even know they're going to pull the business credit. Like the bank will do that, and sometimes the business banker doesn't know that they're pulling the business credit.
And as you said earlier, because of the way it's regulated, the business, like you as a small business, might not even see it.
Exactly. So you'll never know that they're denying you based on that. I mean, some business bankers are more sophisticated and they do know, and they'll tell you, you know, that something came up on your business credit. But they all use different business credit bureaus. Some might use Dun & Bradstreet, some might use Experian. Not a lot of them use Equifax. So what happens is you might get denied for that type of financing for your company, and then you have to go and find other financing that could be more expensive. And also you have to take out not what you need, but maybe more than what you need, and you're paying interest on that continuously. So it's really important for that. I mean, there's so many reasons why it's important, because people are going to review it for financing, for terms, and then there are a lot of companies that have really good business credit that put their DUNS number on their website. So they're actually trying to get new accounts to pull their business credit so that they can review their competitors' business credit so they have an edge. So let's say I have really good business credit, and I'm just going to pick out an industry. I am in the transportation industry, and I'm putting in a bid for a job with some large company. So when I put in that offer, when I'm bidding for this particular job with a major company, I'm also going to hand in a copy of my business credit report to show that I'm sophisticated and that my business credit is excellent. So even if that company didn't normally pull business credit, they might think to pull the business credit of the competitors now that they're seeing that I'm handing in my business credit. So it also makes me look much more sophisticated because I'm giving them a copy of my business credit report. So in the transportation industry, they're always looking at business credit, so it's not something unusual. But there could be other industries that somebody might not think of it, and then you give a copy of your business credit reports and just shows how sophisticated you are, and then that company might pull the business credit of your competitors, or if you're not the one handing in a copy of your business credit, then you're the one who they could be reviewing, and if your business credit doesn't look good, it's not going to bode well for you when you're trying to get a new job, when you're bidding.
And an interesting part of it, because anyone has the ability to check anyone else's business credit report, you could check your competitor's report. So if you know who your direct competitor is, and you know, let's say you have a leg up on them on your business credit, that's something that
yeah, so, I mean, this is a very interesting topic that you bring up, and the reason we have clients that hire us to work on their business credit every single day because their business credit is so important to their company. They know that it needs to be great on a daily basis. And they also come to us and they say, I want to see a copy of my competitor's credit report today. We're handing in a bid. So they want to know when to hand it in, the best time to hand it in. If their competitor's credit isn't as good, they're going to hand it in at that time. So they want to see what's going on with their competitors.
And these are all things that in the personal realm can't happen, of course. You have protections there. One thing I just wanted to go back to, earlier you mentioned the DUNS number. Can you explain a little bit about what that is?
So everyone has a DUNS number if you have a DUNS account. So just like we have Social Security numbers, it's not exactly the same, but it's the number that's associated with your business. It's their file that they have. So let's say, you know, your business has a file with Dun & Bradstreet with information about the business, like the amount of employees that work for the company, what the annual sales are for the company, and then it gives you vendors and creditors and what your payment history is. You will have a DUNS number associated with your file, so that's what I'm talking about. So when you look up the name of your company through Dun & Bradstreet to see if you have a file, if you do have a file, then you have to purchase, reviewing that credit report, it will show the DUNS number, which is your file number with Dun & Bradstreet.
I've seen, at least on their own website, that they will charge people for the ability for them to create a DUNS number. Is that the only way to create a DUNS number, is to pay them, or are there other aspects?
There are other ways. Actually, I mean, usually you have to create a DUNS number by paying them. So I think there might be ways to do that when you're doing government bidding. I would have to get the specifics on that just to tell you, but my staff is listening to the webinar, so they'll look up and see if there's something that they can tell me while we're talking that might answer that question.
Okay.
So I'll keep my eye on my emails to see if they have directions on that.
Good.
But usually you have to pay for a DUNS number. The other way you get a DUNS number without paying is when your vendors and your creditors update information about your company to Dun & Bradstreet. So if you have a new company or you've been in business a couple of years and you're not sure if you have a credit profile, you would go to Dun & Bradstreet and look up to see if there is a credit profile. If there is one, it means that one of your vendors or creditors reported information about your credit to Dun & Bradstreet. So it could be good information, it could be bad information, and then you want to get a copy of your credit report just to see what's there. And that brings up another really important point. So if you've been in business 20 years, and we get this all the time, let's say you've been in business 20 years, and you pay your vendors and your creditors on time, and you have 150 vendors and creditors, and you think, I must have the best credit. And then you go and you order your credit reports, and you have 2 accounts or 3 accounts on your business credit reports. This happens all the time, because just because you have vendors and creditors, it does not mean they're going to report to the Business Credit Bureau.
Oh, them to report.
Exactly. Right? So, you know, you could be a thriving, substantial business with 100 employees, and you could have hundreds of vendors and creditors, and you pull up your business credit reports, and there's 3 vendors that have a $500 limit with, let's say, a $400 balance on those 3, and it says there are 4 employees. This could be because nothing has been updated in the last 10 years in terms of who you are.
No matter how big you are, you always start with 4 employees.
Right.
At some point, yeah.
And not all the vendors and creditors are reporting. So if you're trying to get an account with a large company and they look at your business credit and see you have 4 employees, they're going to say, how are we going to hire this company? They can't handle the work that we have. So it's really important that the information on your business credit bureaus is current and correct. And if your creditors and your vendors are not updated to the business credit bureaus, then work has to be done. And just because you have vendors and creditors doesn't mean they're going to report.
That. And so that's, you know, you're talking about how business credit reports will list things like the number of employees. So let's kind of talk a little bit about the overlap. You know, when we compare it to personal credit, I would assume that at least those vendors that are reporting, it'll show things like who you owe and your payment history and that sort of thing. But what else appears on the business credit bureaus that you would never find in a personal credit report?
Right. Well, business credit reports, they're going to have, they could have financials about the company. So personal credit, you're never going to see someone's income on a personal credit report. But on a business credit report, sometimes financials are posted. Now, that's something that the company usually does. you don't get business financials without the company reporting it. So most companies don't want to report their financials because they don't want that being public record. So they don't want everyone to know what their profits are and all the details of, the company financials. But some do. And we had a company recently who had the financials updated like 10 years ago. And now I think they grew from like a $10 million company to like a $60 million company. And they don't want to update the new financials. So it kind of puts them in a
and they can't redact it, right?
No.
They're either stuck with the bad numbers
or... But the good thing is it says that the financials were from 2000 and 2001. So it's not as horrible as if it was very general. You can see it's old, outdated financials. So it has financial information. It has company information. Like I was saying, your address, how many employees you have. It will have like a company code which identifies what type of a company you are, and that could be important when you're doing government bidding because they're looking at so many business credit profiles. They want to make sure they have the right code of your company, or they'll just discard your company bid. So you want to make sure your company code is correct, and that's something that you want to look up to identify what type of a company you are. It'll have vendors and creditors. Now, this is very important. So people get really frustrated with the business credit bureaus because they'll look at their business credit reports and see there are late payments on a particular vendor or creditor, but it doesn't say the name of the vendor. It just gives generally what type of a vendor it is. So if it's for, supplies, it might give you supplies for the company. And people get very angry because they don't know who to call to fight the late payment when they don't know the name of the creditor or vendor. But the reason that they do that is because your vendors and creditors are like your special recipe for your company. And if your competitors can see the names of your vendors and creditors, they can then call your vendors and creditors and start using them.
Right. So that makes perfect sense from that standpoint in protecting proprietary information. So what does the business or the advisory company that's wanting to help fix mistakes, so how would you get to the bottom of that?
Well, it's very difficult and time-consuming, and that's why people hire us. Because we'll sort through hundreds and thousands of vendors.
They'll give you the list of their vendors and you find out.
And not only will we do that, but we'll also work on removing the late payments through other legal processes that we know how to do. And this is another thing that really is important to business credit. So if your vendors and creditors that are listed, like I said, a $400 balance, and that $400 balance vendor or creditor has late payments, and that's the highest balance on your credit, that's going to really affect your credit scores.
Similar to with the personal credit, how if you overutilized, if you're maxed out, or a different
it's not similar because with personal credit, if you have high balances, that hurts your credit. With business credit, it's if you have high balances on the vendor or creditor with a late payment. So if it's the highest balance vendor or creditor, and you have late payments on that, it's going to hurt your credit. This is Dun & Bradstreet.
Right.
So if we can update other vendors and creditors with higher balances to your credit, that's going to minimize the impact of the lower balance late payment vendor.
Right.
So it's not just the late payment, it's a matter of building the credit and getting better creditors on there with higher debt and higher limits so that the credit is more balanced and the lower late payments aren't going to hurt you as much. Now, hopefully we'll get those off the credit report so they won't hurt you at all. But we want to balance out the credit report, bringing in more vendors and creditors.
Help it long term, too.
Exactly. And that also will give you a higher utilization suggestion. So on some of the credit reports, they suggest certain limits to you as a business based on what's on the credit report. So if somebody was reviewing your credit to extend credit to you, they're going to look at what the credit bureaus are suggesting they extend credit to you for. So they might suggest a $100,000 credit extension for those creditors. So we want to get that up as high as possible so that when you want to apply for credit, you're going to get approved. So the more credit you have out there and the higher limit vendors and creditors you have, the more of a chance you're going to be able to get more credit. It's different from personal credit in that way.
Right. So, yeah. Okay.
So that's really important.
So we've taken a look at what kind of information generally shows up on a business credit report. So let's
well, let me just finish. Sorry.
Sure.
So you have UCC filing, and that stands for Uniform Commercial Code, which is like if I had a loan with a bank, they would put a UCC filing on my business credit so people know that I have lines that are extended that might not be on the credit report. And then there's tax liens, judgments. Some credit cards report to some of the bureaus, but not all of them. And like I said, company codes and creditors and vendors. And also what we found that's interesting is, for example, we had a company that we were working for. They purchased the company, an existing company. And that company also had, they were doing business as other companies, so DBAs. And some of the DBAs had really bad credit and tax liens on them. And this company, when they purchased the company, never looked at the business credit reports and did not know that they were merged with other DBAs that had poor credit history. So now the company that they acquired, they grew the business, and a few years later they wanted to get some financing for the company, and they had a mess on their hands with all this bad information. So we had to clean up the company profiles of the other companies and merge them together and make sure everything looked good for this particular business. So that's very important. If you're selling a company or if you're buying a company, you want to make sure your business credit is good.
So, and that'll come into play even if, let's say, if would that come into play if you're buying like a turnkey business or something like that?
Yes.
Or?
You want to make sure to look at the business credit and make sure it's good, because you might be buying business credit that's poor.
Yeah, and it reflects on you.
Yeah, and then let them clean it before you buy it, or maybe there's a discounted price because it's negative. And
like when you buy a house that has defects.
Exactly.
So we talked about what's on a credit report. You mentioned that there's certain types of scores and indexes, as they're called at times. So can you speak to some of the more popular scores and indexes that you pay attention to?
So when it comes to like your Dun & Bradstreet credit report, most vendors and creditors, and even when you're going, like when you're doing government bidding, they're going to look at your paydex score. So the paydex score ranges from 1 to 100, excuse me, and the higher the paydex score, the better. So usually we want to see an 80 to 100 paydex score. Anything under an 80, like between 75 and 79 is not terrible, but anything under a 75 is considered a higher risk. So that's like the most popular paydex score, and then the most popular Dun & Bradstreet score. And then Dun & Bradstreet has like so many other credit scores that really are all reflective of what your payment experience is. So they're very similar to the paydex score. So if your paydex score is good, then your other scores are also going to be good as well. Now there are some scores on the Dun & Bradstreet that rate your industry. So you can't change those scores. So if your industry is like a high-risk industry, those scores are going to be lower, and those are like the viability score. So some of the scores range. Lower is a lower risk, and higher is a higher risk. But for the most part, the Dun & Bradstreet paydex score ranges from 1 to 100. 80 to 100 is excellent. And if it's under that score, it's going to reflect lower for all the rest of the scores on Dun & Bradstreet, except for the viability score, which is industry specific.
Okay.
So that's the score you want to look for on your Dun & Bradstreet.
And one thing we came across is, so you mentioned like any score 80 to 100 is good. So all things being equal, obviously there's other factors. For someone that has an 80, it's basically paying on time. So how does the person with an 80 differ from a person who might have something closer to 100?
That's a good question, and that's kind of like a secret recipe we don't really like to tell everyone, but I'll tell you today. So if you pay your bills to your business early, you could be 100. But, I mean, most businesses are not paying their bills
It
early.
has to make business sense. And the reason I wanted to highlight that is because that phenomenon does not exist in the personal credit world, right? You might have peace of mind paying your bills 3 weeks before the due date, but paying 3 weeks versus a day reflects equally on a personal credit report. But as you said, in the business world, it's actually looked at differently.
Right. So, I mean, you could actually manipulate that at the right time. So let's say you plan on going for a business loan in the next 6 months and you want to make sure you look great. You could start paying your bills early, and that should help. So, I mean, that's one way to do it. But the paycheck score looks at you over the past year. So this is an issue for people. So you can see what, if I'm looking at your Dun & Bradstreet paycheck score, I can see what it looks like monthly over a year period. So that's why businesses hire us to fix their credit on a daily basis, because they want the view of their business credit over the last 12 months to be consistently above the 80 on the paycheck score. So if we work on it every day and get rid of whatever delinquencies occur immediately, then that's going to show a consistent above 80 paycheck score over the last 12 months, which is what they want when they're getting their credit evaluated for investors, or if they're doing government bidding, or if they're in the transportation industry or manufacturing. You know, there's so many reasons why they need their credit as high as possible, their paycheck score, when they're consistently being evaluated. Another thing is, when you're hired by, let's say you have a partner who is providing a product to, let's say, Walmart, a major retailer, Walmart might look at that company's partners to make sure their business credit is good as well. Because if they're supplying part of the product to the first company and they have poor business credit and they might be at risk for going out of business, that's going to affect the supplier that Walmart is using. So they need to look at the branches of the actual company that they're working with to make sure that that company is going to be stable if they order products from them. So this is very important, you know, if you're part of the process of manufacturing and producing a product for your accounts. You want to make sure your credit is good, or they're going to get rid of you if there's a
nothing to do with you directly.
Right.
Also, in a weird sense,
it is. There's a lot to it.
At the end of the day, right? So you might say, oh, why is Walmart going through all this trouble? But maybe they're anticipating trouble that you wouldn't have even thought of that you're going to feel in that way too.
Exactly. So let's say, you know, you need nuts and bolts for your product or whatever it is that you need to make your product, and your nuts and bolts company has poor credit. That could be a problem for you. And if all of a sudden they're out of business, now you have to go and find another company, and maybe you won't deliver the goods in the time that Walmart wants you to deliver it. Yeah. So that's very important. So that's why they want that score to look consistently high so that there's never an issue and they don't have to worry about their credit aspect. There's so many other things to worry about in business. You don't want to have to worry about your credit scores on a daily basis as well.
Right. So we talked a little bit about strategies for having a good business credit score. So what are some general strategies for a small business or a business in general that wants to build their business credit?
Well, the first thing is to look at your business credit and see if you have it. And if you don't have it, then you need to get accounts with the credit bureaus. And then you need to find out what vendors you can use and creditors that do report to the business credit bureaus. So when you're looking to get a vendor, a new vendor, or maybe change vendors, you want to ask them, do you report to Dun & Bradstreet, Experian, and Equifax? And if they say no, then even though it might help you, it's not going to help your business credit. So you might want to continue to do research to find the right vendors and creditors that will report to your business credit report, so you know that you're building your business credit. Now, some vendors and creditors might give you such a great deal that you're just going to not care about whether to report. But you want to find ones that do. Now, we have different programs for that. We have concierge business credit building, where we actually do the building for you, and then we have a program that's like a manual program where you can do it yourself, where it's much less expensive, and we give you lists of vendors and creditors that will report to each bureau. And you can sort through that and go through the whole process of building your business credit. We tell you what you need to get DUNS numbers and Equifax and Experian profiles and just the whole process of building business credit. And that's like hundreds of dollars instead of hiring us where it's thousands of dollars. So depending on where you're at with your business, you know, you could do, if you have a lot of time, you could do the manual. If you don't and you're a larger company and you want to take that service off your shoulders, we can do it for you. So there's a lot of different aspects to building business credit. It's very complicated because, like I said, you can have 200 vendors and nothing is showing on your business credit report. So it's really important to make sure that if you're going to get new vendors and creditors, they'll report to the business credit bureaus.
In your experience, have you noticed that there are certain industries that business credit affects more or even less?
Well, I would say, like, if you're doing public speaking, you know, it's rare that anyone's going to pull your business credit report because it's just you that really is.
Service, and it's self-contained. You know, you're not relying on other vendors and bids. And,
right.
Yeah.
And usually people in the public speaking sector aren't like doing government bids and things like that. But I heard recently somebody is doing some work for the government as a public speaker. So something like that. I mean, like industries where you don't know it's affecting you, like let's say you're an architect and you don't even realize that people are pulling your business credit when you're trying to get a new account or bidding on a particular job. So, I mean, we have some architects that have us on retainer and we work on their credit on a daily basis, and then we have others that don't even think about it. So, I mean, other services like the credit repair industry, I don't think anyone's looking at our business credit. I've never heard of that before, but I want to make sure my business credit is as good as possible, because if I was hiring my company to fix their business credit, I would want to make sure that their business credit is good first. So, like, that's how I think. So it's
but industry-wide, not necessarily the case. Yeah.
So, you know, I mean, thinking of other industries that might not, I can't even tell you which ones aren't being used. I know more about which ones that are. As attorneys, their business credit is reviewed consistently as well. You know,
even if they're solo practitioners.
Well, maybe not, but if they're doing like more commercial business, then they're going to have their business credit reviewed. And then also, it doesn't matter what industry you're in. If you're going for a loan, your business credit is going to be reviewed. If you're in an industry and you're trying to hire executive talent and they're sophisticated, they're going to look at your business credit reports and make sure.
Potential employees.
Yeah, because, you know, you could like you could hire somebody at a high salary and then 7 months later, you cut them because you can't afford them.
They'll be able to anticipate that.
Yeah, if your business credit is poor and you have tax liens and all kinds of collections and judgments, you know, and issues, then you might not want to go and work for that company because you have a lot at stake if you already have a great position. So that's also another thing that business credit is being used for. And because it's unregulated and nobody has to ask for your permission to review your credit, you may think, oh, nobody's going to look at my credit. And they may be, and you wouldn't even know it.
And that's the interesting thing, as you said, is because there's no transparency in the industry, it's a balancing act to say, like, you'll never know. If you say, you know what, I'm just going to not worry about this, you won't know if it's affecting you. If you are worrying about it and doing everything you can, you won't always know if that's the right decision or not either. So it's, you have to make a educated guess.
Exactly. And we did skip, because I didn't go into some of the other credit scores. I talked about Dun & Bradstreet, but I didn't talk about Experian and Equifax. So Experian is a credit ranking score. This is the most popular, and it ranges from 1 to 100, and 70 to 100 is good. So the lowest score is the highest risk on that one. So it's similar to the Paydex, except 70 to 100 is good. With Paydex, it's more like 80 to 100. And then the Equifax score, the credit risk score, ranges from 101 to a 992. The higher, the better. 0 means that you file for bankruptcy, and a 500 plus is considered good. So that's the Equifax, the main score. And then also, you know, I wanted to talk a little bit about the FICO SCSS score. So this score, let me just find it. Okay. So the FICO SCSS score is a score used by the SBA. It's a real tongue twister. So the FICO SCSS and the SBA. So this score is a combination of your personal credit and your business credit, which is very interesting. So if you're going for a small business administration loan, they're going to look at the SCSS FICO score. FICO is the score that's used for personal credit. There are over 50 versions of the FICO score. And there's the credit card score, there's the mortgage score, there's the auto scores. So FICO also sells a score for the SCSS, which is the SBA, which is the FICO SCSS score, and it combines one of the 3 business credit bureaus and your personal credit scores. So that score ranges from 0 to 300. A 140 is usually the minimum score they want to see, and 150 and above is considered good. So how it works, and it's really an interesting score, because what will happen is the formula will look for your personal credit scores and then one of the credit bureaus that the lender decides they're going to use. So if they go to the Dun & Bradstreet and there isn't enough information for them to gather the score, they'll go to the next one, Experian, and then Equifax. So it'll just go from one to the other to the third. So that's why it's so important to make sure all 3 business credit bureaus have the right information on them, because you don't know which bureau a lender is going to use. So they'll go through all until they get to one that has enough information. If they don't get to one with enough information, then your scores aren't going to be as good.
So now, and this is a case where you have a hybrid of your personal and your business score. So one of the things we've noticed, and particularly with small businesses, is that they're usually asked to have a personal guarantee when they take out a loan. Can you speak a little bit to that and whether or not that plays out also at the larger business?
Sure. So that comes to like the question of why is separating business and personal credit so important?
Yeah.
Because as a business owner, a lot of times in the beginning of a business, people rely heavily on their personal credit cards and personal financing. But as your business grows and becomes more successful and you want to go and buy a house, if you have all this debt on your personal credit, that's going to factor in when you're going for a mortgage. So let's say I have a business and I use my personal credit cards for my business and I'm charging $300,000 on my credit card every month for my business. And now I'm going to get a mortgage and the lender says to me, we can't give you a $900,000 loan for your home or a $500,000 loan for your home because you have all this debt on your credit card. Exactly. And even if it is for the business, you're personally responsible for it. Yeah. So that's going to play into the size of the loan you're going to get. So that's why it's so important to separate the two as you're growing. So one of the ways to do that is to build a business credit and to then go and get lines of credit that are on your business. So even though you're signing personally for a line of credit that's on your business, like for example, I have a business line of credit with the bank that I do my business banking with, and I've been with them for 20 years now. And even though I have this, let's say it's a $100,000 line of credit on my business, even though I did sign personally for it, it doesn't show up on any of my personal credit. This is a business line of credit. Unless I default on it, then it will show up on my personal credit. So it's separating out. So when I go for a personal loan, it's not going to show up on my personal credit. And then there are other kinds of loans and credit cards that aren't going to show up on your business credit, your personal credit, unless you default. So there are credit cards that you can get for your business that won't show up on your personal credit unless you default on them.
Do they make those terms clear when you're applying
no.
for cards?
So when you apply, let's say you're applying, like I have some business credit cards that show up on my personal credit. They're business credit cards and I don't really use them much for my business, so it doesn't affect me much. But when you are going to apply for a business credit card, you want to call the actual creditor and ask them, does this report to my personal credit? And try to find the creditors that only report to your business credit. Obviously, if you have to sign personally, they're going to report to your personal credit if you default. So, I mean, that's one issue that you can't really separate that if you have to sign personally for the credit card. And that's another question. Like, if I'm signing personally and my business goes under and I don't pay these credit cards, it's going to affect your personal credit. But there are other things you can do, like if you're leasing equipment, when you're going, let's say you need to lease a large printer in your business if you do a lot of printing. So they're going to say to you they want to check your personal credit and they're going to want you to sign personally. You can refuse and say, no, I don't want to sign personally. And then they'll say, okay. They might ask you for business information and they'll approve you based on your business. So you don't want to just immediately say, okay. You want to say, no, I don't want to sign personally. What can you offer me without signing personally?
Realize that you have some leverage.
Right. If there's no profits to your company and you've been in business for a month, then maybe you're not going to be able to do that. It depends on the vendor, the creditor, the lender. Now, there are a lot of lenders out there for business lending that you can get a loan without really having much of a business, but you have to remember, what is it costing you? Because there's all these advertisements online, we lend for businesses that have been around for, 10 minutes, and you don't have to show a profit, but they might be charging you 10%, 20% of what you're borrowing, and points on top of that. So it's really important to look at what you're getting and what the cost of it is and not just get so excited because someone's willing to give you credit. It's just like personal credit.
Bad credit, no problem, right?
Right. Like if you get I've seen people do this with cars. You see all these advertisements all the time. We'll give you car financing no matter what your credit score is. So now you're paying $800 a month for a used Honda when you could buy a new BMW for the same amount. You have to really look at what you're getting for the price. And that's the same thing with business credit. The more you build up your business credit, the better your personal credit is, the more that's going to be available to your business if you're showing a profit. If you're failing year to year to year, it doesn't matter what your business credit looks like. You're not going to be getting an SBA loan if your business is failing. There are SBA loans that are extended to companies that haven't even started yet if you have a good business outline. And,
they look at other things.
Right.
Yeah.
But if you have really good personal credit, really good business credit, and you're doing well in your business, you're going to have more available to you and the best pricing, and that's very important.
So one of the things that often comes up, right, is the importance. You talked about some of the reasons why it's important to separate your personal and business when it comes to your credit. Mm-hmm. What are some other things other reasons why one would want to separate personal and business?
Yeah, well, you want to separate your personal and your business credit because your business can fail. And if your business does fail, and let's face it, businesses fail all the time. The internet is just driving everything to such a pace that 1 minute, you're booming, and the next minute you're out of business. Look at the printing business. that was a great business at one time, and now it's not doing very well because of the internet and email marketing and everything. So if you have everything on your personal, like you've signed personally for everything and your business fails, now you're personally liable. And then you're going to have to go to bankruptcy as a person, and now you don't have a business, you don't have an income, you have to go to bankruptcy. How are you going to have credit to live? So it's like everything is reliant on your personal credit. It puts you in a really bad position. And also you want to separate it, because if you decide you want to sell your business at some point, you want to have good business credit, so that makes you more attractive to somebody who's buying your business. There are a lot of different reasons why you want to separate your business and your credit.
That's mentioned for tax purposes. Your accountant will love you a lot more, of course.
Well, yes. I mean, having like a corporation or a legal business entity is just basic business 101. If you don't have a legal business entity, you cannot have business credit. And also, your liability as a person grows intensely, because if you don't have a corporation or some kind of a legal entity that separates you from your business and you do something that hurts an account, they're going to sue you personally. So you want to make sure you always have a legal business, meaning you have a tax ID number and you're a corporation or an LLC, you know, a sole proprietorship, and that's a little different. You know, you're not really as protected, but you do want to have a legal business entity. Being just like a mom and pop where you're just, you know, not legally a company, you could get into trouble with the government too. So,
do you ever get calls from companies in that situation?
No.
So with you guys, it's usually they've already established themselves.
Yes.
Yeah.
We might get calls from a new company that needs to build business credit, but they're usually already an entity. We've never gotten a call from somebody that isn't a legal entity.
Yeah.
But we do, if you're not, we do on our manual, do-it-yourself building business credit, we do teach you what you need to do to become an entity so that you can get a DUNS number and an Experian file and an Equifax file.
Oh, it works hand in hand.
Yes,
yeah.
Absolutely.
Okay, so let's pause for a minute and see what kind of questions that you guys have. So for those of you that joined us after we got started, you can utilize the chat feature, which is on the right-hand side of your screen. You might have to press the arrow to the left of chat to open that up, and you can send a chat to the host or to the panelists, and we will be able to see and answer your questions right here. While we're waiting for some questions to show up here, earlier you talked about the fact that North Shore Advisory is a credit repair organization, and some of you that on today's call might be wondering, you know, at GreenPath we usually urge consumers to exercise extreme caution when it comes to credit repair companies, and that's sort of like a wide brush that we paint, and there's a lot of reasons why we do so. So I wanted to just give you the opportunity to talk a little bit about if someone is, you know, when it comes to personal credit, GreenPath, of course, we can assist you. We're a nonprofit, but just in general, what are some of the flags for legitimate versus not legitimate credit repair companies?
Well, I think anyone who guarantees you anything is a red flag, because you really don't know what's going to happen with credit in advance. I mean, with business credit, it's different. We can guarantee a lot of things because we know what's going to happen, and we can say we're going to give you money back if we can't get you to a certain score. But with personal credit, there are companies that charge monthly fees, and then there are companies that charge like pay per delete account and pay for change account. So you never know what's going to happen with someone's credit. You could say, like I've said many times to potential clients, I think there's a 90% chance we could remove this account from your credit report. But I would never say we would definitely remove it from your credit report. You're actually not allowed to do that legally. So I think that's a red flag. And when someone tells you that they could improve your score in like 10 days, you know, scores don't improve usually for like 30 to 60 days unless you're fluctuating with balances, you know. So I think that's a red flag as well. Or if the company doesn't even look at your credit and you could hire them, some of these companies online, you could just hire them. online through like their site without anyone even seeing your credit. It's like a doctor giving you a prescription for drugs without ever seeing you. You know, that's a red flag to me. And there's so much when it comes to personal credit, so much information that people need, like if they're going for a mortgage and they need a certain score to get approved. If you go to a credit repair company and they say, oh yeah, we can improve your credit, and you're at like a 450 score and they get you to a 500, you're still not going to get a loan.
Right.
So you want to talk
to,
you want to talk to someone who can say to you, who will say to you, what are you looking for right now with your personal credit? Are you looking for a mortgage? Are you looking for credit cards? Do you want a car loan? And then they can kind of tell you what your score needs to be to get those items. And then they can tell you whether they think they can get you there. So, you know, it's like a holistic view. They're looking at the whole picture and giving you an idea of where they think you can go, how long it'll take to get there, what you should be doing. Are you going to get education about how credit scores work? Or is it just going to be they're going to fix your credit and goodbye and good luck? Because if you don't know how credit scores work, then you're going to wind up in the same position again.
You want to be empowered.
Exactly. So we have like an educational site that people log into and they learn all the factors about credit and what they should be doing if they're going for a mortgage, you know, what they should be doing if they're going for car loans. So if you're talking to a credit repair company and they're not really giving you much information, but they say, yeah, we can improve your scores, I don't think that's really somebody who's a professional.
So what it boils down to, and this could actually be used for all of you guys just in general when it comes to weeding out companies that don't have your best interest or outright scams, is be careful of companies that overpromise things. Be careful of companies that make it seem really easy, where they say, we're just going to take care of everything. You don't have to worry about it. And again, even in your services that you offer where you guys are doing a lot of the heavy lifting, at the same time, you're still in communication with the progress along the way and that sort of thing. So,
yes.
All right, so I don't see any questions here, so we'll put a bow on today's conversation. We thank everyone for joining us today. We will be resuming our webinars in July. Stay tuned for more information about that on our website, which will be posted shortly. If anyone has any questions and wants to reach out to us, you'll see our phone number and website listed here. If any of you are part of a credit union or other partnership, you might want to refer to that credit union for your specific phone number or website to call. The website and phone number listed is our general website and phone number. So with that, I thank you, Tracy. And yes, in case you guys didn't notice on the previous screen here, if anyone's interested in learning more about North Shore Advisory, really easy to remember, northshoreadvisory.com. You can learn more. And one thing I will mention is they have a really cool blog with some great information about both personal and business credit. So if you're looking to stay up to date with that sort of stuff, feel free to do that as well. So I hope everyone has a wonderful rest of the day, and thanks again for joining us.
Thank you, everybody.